Carter, thanks for being here.
Sir, thank you so much for having me.
Well, I like to check in with you every couple of months, it seems like, as we're going to be doing this, and we'll see each other in May. We'll get to that in a sec. Give us, uh, let me start here. This is not your first rodeo in cannabis. You have been with an operator, Jushi. You've been on the sort of finance side at Casa Verde, and now you've launched Aquinnah Capital. Give us a little bit of sort of that thought process and sort of the expertise you bring to what you're doing now, and then we'll talk exactly about what you're doing now.
Yeah, absolutely. Happy to. I think both of those experiences will help give some context for why I decided to start Aquinnah and what we are. So very quickly, my background prior to cannabis was in traditional M&A, kind of corporate finance at Morgan Stanley. I did investment banking, and specifically, I was in the consumer and retail group. And in 2018, 19. During my second year as an analyst, obviously Canada famously went federally legal. A lot of our clients in the consumer world started to do big M&A deals in Canada. That got my attention as a young banker who was doing kind of consumer and retail deals, but all of a sudden we couldn't do these deals because they were, off limits. Mm-hmm. Scary. But at the same time, it piqued my interest, and these were multi-billion-dollar transformative cross-border transactions that I thought any bank would have loved to advise on. So that's kind of initially how I even learned about the business side of cannabis. And post Morgan Stanley, where a lot of my peers went on to more traditional buy-side roles and in hedge funds and private equity, I was just kind of locked in on this cannabis thing. And so at the time, there were only a handful of US focused kind of large, I say like with a small L, mm-hmm. large operators gaining pace. And I joined a smaller one, which at the time didn't have any assets, just had a handful of people kind of chasing this roll up thing. Mm-hmm. And that was Jushi. So I was brought on as one of the earlier M&A people to help canvas this opportunity set in the US and figure out, okay, we've got these state legal rules kind of combating federal illegality, but if we selectively pick and choose what markets we want to be in, we can operate legally. Carter, go figure out what states you think are attractive and bring them back to us, and maybe we can try and roll these things up. And that's exactly what we did for the next 2.5, 3 years, scaling a cannabis business through acquisition, which is effectively the traditional roll up. That was a really awesome experience, and I'm still super, super tight with some of the people who I started out there with. Some of them are still there. And it taught me a lot about complex M&A, sourcing deals, closing deals, regulatory hurdles, operating in timelines that you have no say over. Right. And just hats off to anyone who's still doing M&A, in cannabis, at an MSO or otherwise, because if you can get a deal done in this space, and I've also done deals in more traditional kind of consumer, this is 10x as hard. So kudos. Following my time at Jushi, I went off to business school and then later to Casa Verde, which was a very different experience, but equally impactful because for the first time, instead of on the operating side, I was learning how to institutionally invest in the sector. And so I joined a firm that had raised a bunch of money and had a robust portfolio of companies already. And I was tasked with helping to add to that. And that was awesome because no longer was I, thinking about new deals and their relation to our existing strategy. It was just kind of like, okay, we get multiple shots on goal to see if these things, will provide attractive exits for us. Casa Verde's approach was very different than Jushi's. Casa Verde was more focused on kind of technology and kind of ancillary service providers that power the cannabis space as opposed to brick and mortar retail. So equally important, just different. And, I think the industry doesn't work without Dutchy, Metric, Banks, you name it. And so it was great to learn about that side of the business as well. Ultimately, actually, it's funny, it was a year ago today that I sent my first kind of like launch email, I guess, for Aquinnah Capital. And the idea behind Aquinnah was a culmination of what I learned from both Jushi and Casa Verde, and the times that we're in cannabis, where capital is really hard to come by, and the ROI on every dollar spent is really scrutinized. So I was going to launch something net new. I figured, public cannabis is hard today for lots of reasons. And, it's hard to establish a strategy that's unique and has edge in the public domain because there are only a handful of stocks that are investable. And then on the venture side, I had done that already, and there weren't lots and lots of interesting opportunities left, in my opinion. And there was a limited amount of exits that we were seeing. So, I wanted to do something that didn't necessarily rely on exits. And so at Aquinnah, we're of the view that, despite the noise and despite, a lot of delays and challenges at the federal level, cannabis is an incredibly attractive asset class. And if you can focus on cash flowing operators in attractive limited license markets, which is effectively what every MSO wants to be in, and provide them with growth capital, then you don't have to worry about a sale. You just have to underwrite to the eventual cash flows. And that's what we found. So at Aquinnah Capital, we are, we describe ourselves as a flexible capital provider. I would say most of our deals look like some form of debt with maybe a small equity component in the form of warrants. We like brick and mortar retail. We think there are plenty of opportunities across lots and lots of states that are underserved and overlooked. And we think that there is, just in like the 8 or 9 markets that we're looking at today, we think there's call it $4 to $5 billion kind of financing need just with retail. And so there's plenty of opportunities to invest capital. And, we're very grateful for our early LP support to help us prove this thesis. So, we've been doing this for just about a year. But a year marks when I sent the first email. We haven't been doing this for a year, but we have been deploying over the last couple months into our first deals. Very excited to be partnering with operators in these markets, and we think there's just a ton of white space and excitement to come.
Well, I want to dive into that because you also spoke at the High Rise event we did with our friends at Gotham in January in New York City, and I can tell when people watch this and listen to this, their ears are going to perk up because you've said a number of different states. You've said there's lots of gaps that need funding. You're providing support or investment into these operations. I don't know if your floodgates have opened sort of inbound, but like when you do get inbound from these states, like you're looking at operators, you said brick and mortar retail, especially, like what are you looking at? Is it location? Is it they've been a good operator for some period of time? Is it they have some unique offering, which is hard to do, but like what are those sort of, when you put them all on the wall, like what are the things that boxes you're trying to check or things you're trying to look at?
Definitely. So this is really where my Jushi experience comes into play. When I was at Jushi, we were looking at a specific mandate of operator. Well, the operator themselves wasn't always that important because sometimes we would acquire the asset and put our people in it. I don't have the luxury of doing that anymore. I'm not acquiring stores. I'm providing them with capital so that they can run their businesses. And so I need to have an elevated sense of confidence in that operator that with this capital, and with a very, very minority kind of equity stake in the business, that they know what they're doing. So what I look for is, first and foremost, the strength and competence of the management team. And that is not to say that if I deem an operator as less strong than another, then I won't do a deal with them. Because there are plenty of first-time operators who have just won licenses, maybe don't fully understand what is required, who we definitely want to help as well. Just when it comes to the underwriting process, those deals look a little bit different. Mm-hmm. So I'd say what we look for is, obviously within the markets that we like, strength of management team. Ideally you've got a location that you've picked out, and you kind of have a landlord who approves of the use, or you own the real estate, which is even better, but more rare. We like to see a realistic kind of budget and use of proceeds. And that cuts both ways, right? Like, it isn't helpful to me when somebody says, hey, we've got a license and a good location, with 50 grand, we can get this thing open tomorrow, from nothing. I don't believe that. That's not possible. Right. And similarly, if you've got a good location and a good team, and you tell me you need $5 million to get this thing open, I also questions, are going to flood into my mind. So good management team, good location, reasonable understanding of the costs associated with it, and then also a reasonable understanding of what you think this can do. And that's hard. That's really hard. And so we don't hold operators to the exact projections, because there's so many variables, which is why any pro forma or whatever that we receive from operators, we have our own kind of adjustments, I guess, to it. So that part's less important to me. I can do my own back of the envelope math and figure out what I think this can do. But yeah, I'd say it's a combination of the team, the location, the kind of believability of what we think this asset can do, and just kind of above all, it's a people business. So do we get along? Do we mesh well together? Do we have alignment on what we think this can do? Because if everything else is right, but we're dealing with a difficult counterparty who just wants us to get out of their hair and give them the money and leave them alone, like, it probably isn't the best fit. So fit is also very important.
It's like anything, right? Like any industry, right? It's that fit has to be there as well as the other things. And what kinds of deals or possible deals are you seeing? Like, is it more of the $50,000? We just need to sort of get things open. We need the first batch of inventory, and then we think we'll be cash flowing. Yeah. Or is it more like we need substantially more, but we have all these other things and we're a good team and all those things? Like, is it somewhere in between?
As you can imagine, when I announced that I was doing this, people saw new cannabis fund and just ignored the rest. And so I have been, and I did that intentionally. I mean, I love getting deals, even if it's not within the Aquinnah mandate. It's likely that I might have someone else that could be a potential partner. So we see a lot, and I love seeing a lot. I think what our sweet spot in terms of what we'd like to be funding today is anywhere from $500,000 up to, call it, $2 million. And that use of those proceeds can be anything from some working capital, because you're basically built out already and you just need staff, hiring, inventory, etc. Or the extreme other case, which is like you have nothing other than the license and a location, and you need capital for the tenant improvements, as well as marketing, working capital, etc. So within that band is where we like to be. It's where our first few deals are. But what's also nice is, given the broader scope of what we look at, and some of the other kind of capital providers in the space, there are opportunities to size up if there are more attractive things that are not, within our specific mandate.
Well, that is a good segue. So you and I, Cultivated and Aquinnah Capital, are partnered heading into MJ Unpacked in May and early May in Atlantic City. We've sort of talked about this because we want to host people who want to have a good breakfast, and there'll be coffee and bagels and all those things. And you get to meet us, which is neither here nor there. But if you fit this category, and many people certainly do, in the markets where you're interested, and we'll talk about that in a sec, please buy your tickets through cultivated.news. You'll see it in our newsletter every day, or get in touch with me, because then we can get you to the breakfast and you can meet me, you can meet Carter, and talk about Aquinnah. But I do think it's an interesting time to sort of connect. And goodness, this doesn't affect everybody, but hopefully by then winter will be over, because that is what I'm really looking forward to. It could stop snowing here in Toronto anytime. That'd be great. But we'll be there in May, and reach out because you can get your tickets through us, but also come to our breakfast. We'd appreciate that. But it is a bit of like inbound. So this will post, you'll get inbound, but also being out in the world and seeing sort of what is happening in the New Jersey market in that case, but in the Maryland market, people will be there. Certainly New York folks will be there too. And are those sort of markets that you are interested in? And give us a little bit of what those states are.
Yeah, absolutely. And I echo everything you said about MJ Unpacked. I've actually never been, so I'm super excited. It's crazy. It's probably one of the only conferences I haven't been to in this space to date. And so, yes, very excited to be there out with folks, with operators in New Jersey, a state that we like a lot. Other states we like, this isn't going to be terribly surprising to people, but, limited license, adult use, still nascent enough where, new stores are able to get open and do reasonably well. So, we like Ohio, we like Maryland, we like Illinois, parts of it. We like New Jersey, we like New York. And those are, I would say, kind of like the key states. I guess maybe Missouri as well. And then there's like a tier, I won't call it a tier 2 because that suggests it's less than, but like
1A. Right.
Yeah, of more opportunistic states where we are keeping our eye on interesting opportunities as they arise. So I would say Pennsylvania, Virginia, Florida, Minnesota would kind of fall in that bucket, because I think those will all become really important cannabis markets. But if there's one thing I've learned in my 7-8 years of being in the space, it isn't always the best to be first in cannabis. So I do get really excited about the prospect of new markets turning on. But I am enjoying the luxury of being patient, and also the luxury of not being an operator anymore. That is something that I enjoyed, but I don't want to do anymore. So with Aquinnah Capital, we are creating our own little portfolio of operators. And you could kind of think of it as like a mini MSO, because we have our tentacles in different assets, but we are not operating or really even owning these things.
That's why you can still smile. That's why you seem happy. That's all those things.
Exactly. And a lot of lessons learned, which has equipped us with kind of the know-how to structure these deals, and come to mutually beneficial agreements.
Yeah. Well, this has been great. Well, one, we have gotten to know you, but also to get our audience to know you better as well. We look forward to seeing you in Atlantic City at the beginning of May. You can see all that on our website at cultivated.news. And thank you so much for joining us here today on Cultivated Live. And we look forward to seeing you, look forward to hearing more from you. And if you want to reach out to Carter, we'll put how to get in touch with him as well. And you can always find us not always find us in Atlantic City. You can find us in Atlantic City at the beginning of May. Not always. Goodness, no. All right, Carter, thanks so much for joining us.
Awesome. Take care. Thanks, Chris.
Thanks, everybody.